Your financial model doesn't need to be perfect, but it needs to make sense. In this episode of Capital Compass, we'll walk you through how to build a founder friendly, investor ready financial model, even if you're not a financial expert. Financial modeling for founders. A solid financial model doesn't need to be complex, but it does need to be clear. In this episode of Capital Compass, we break down how to build a startup friendly model that investors can actually understand and you can actually use. Let's start with what is a financial model. It's not a 30-sheet Excel monster. A pre seed or a seed stage model is a tool to plan how your business might grow and to communicate your assumptions. Your financial model needs to be simple. It needs to show the revenue drivers, for example, the volume, the price. It needs to show the cost, the fixed cost, the variable cost, the head count, the burn rate, and the runway. Let's look at the core components of your financial model. Let's divide it into three parts. First and foremost, your revenue forecast. Second, your cost structure. And third, your cash flow. So when we're talking about the revenue forecast, it's about the number of customers, the pricing, the average revenue per unit, the growth rate assumptions. When we're talking about the cost structure, it's about the cost of goods sold, if applicable, the SaaS infrastructure, the team salaries and the hiring plan, and marketing or your customer acquisition costs. When we are talking about the cash flow, it's about the burn rate, the capital needed, and months of runway. Also, it is not about you being right. It's about you being reasonable and your assumptions being reasonable. Investors want to know how you think. Given this, let's go through some of the mistakes that founders make. Now, don't try to impress with huge hockey stick charts. The best models are honest, humble, and logical. The common pitfalls usually are unrealistic customer growth, underspending on team or marketing, no correlation between the revenue and the cost, missing the runway assumptions. Given all this, what are the tools and the templates that you can use? Now, there are a couple of good templates that are available in the market. For example, Foresight, Model That Fundraises, and others. We'll share a couple of these links in the description of this YouTube video. A pro tip out here, add a summary tab. Revenue, cost, burn, runway in one place. That's what investors check first. In closing, what we'd like to say is that your model is more of a thinking tool. It's not just a fundraising prop. Focus on logic, drivers, and clarity. Build it early and update it monthly.